You might think you know just how much you have saved for your retirement, but it's not how much you have saved, it's how much you keep that's really important. And taxes will play a critical role in that equation. This short educational video will explain just how a Roth conversion could help minimize the taxes on your overall retirement income. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And our goal for making these educational videos is to help make the difficult and stressful process of retirement income planning simple.
Yes, and we do this by incorporating a well-written retirement plan for all of our clients to let them know when, where, and how they can pull money out of their retirement savings.
For the best retirement income planning advice, please subscribe to our YouTube channel and hit the notifications bell to be notified when we upload new videos.
So there are many ways in which you can actually lower the taxes on your retirement income. But in this environment, there's nothing more popular than a Roth IRA. There are basically two types of IRAs, a traditional IRA and a Roth IRA. And I think for this lesson, it's very important for me to explain the differences between the two. As far as a traditional IRA is actually funded with pre-tax dollars, just like your 401k would be, versus a Roth IRA, which is funded with after-tax dollars. And so also with a traditional IRA, you would have to pay required minimum distributions at either age 70 and a half or under the new rules at age 72, whereas with a Roth IRA, there are no required minimum distributions that you have to pay. Also, with a traditional IRA, there are no limits into which you can actually earn in order to participate in one. But there are income limits for a Roth IRA. And that is the premise of our lesson for today. So if you are actually earning, more than $200,000, $300,000 a year, can you do a Roth IRA? Well, the answer to that question is yes, through what we call a Roth conversion. So that's what we're going to cover today. But before we dive deeper into that subject matter, there are two rules that we always want you to know about. And Andrew, what are those two rules?
Well, rule number one is to never run out of money. And rule number two is to never forget rule number one.
Great. So let's go ahead and take a look at what a Roth conversion can do for your overall retirement income. So now that we understand the difference between a traditional IRA versus a Roth IRA, let's go ahead and talk about a Roth conversion. So let's assume that we're going to convert $25,000 and we're going to be in the 22% tax bracket when we do this conversion. We're going to also let this Roth IRA grow for 10 years, and we're going to assume that we're going to get a modest rate of return of only 5%. And with the United States having almost a $22 trillion deficit, would you assume that taxes are going to be lower or higher in the future? Well, at the Retirement Education Center, we believe that they're going to be higher. So we're going to assume that at the end of 10 years, we're going to be in a 28% tax bracket. So when we're looking at after our conversion, you can see that in the traditional IRA, we're going to have $25,000. But the Roth IRA is going to be $19,500. Why? Because we paid taxes of 22% on this money. So we paid $5,500 in taxes. And then the balance at the time of us taking income from the traditional IRA is going to be a little over $40,000, $40,722. And here on the Roth IRA, we're only going to have $31,763 to pull income from. So you might be wondering, why would I do a Roth conversion? Well, here's where the story continues. You have to pay taxes on this $40,000. This is not all of your money. So you would pay taxes on $11,402 on this traditional IRA, where you have no more taxes to pay on that Roth IRA. It was allowed to grow tax deferred, and you're able to pull income without paying taxes on the back end. So if you can see your balance after taxes, you can see that your balance in this traditional IRA is realistically only $29,320 versus the $31,763 left over in the Roth IRA. And that's a potential benefit to you of $2,443. It's a very smart move in my book. So in order for you to know if a Roth conversion is right for you, you're going to have to answer these three questions. One is, when will you need the money? Two, what will the future tax rate be at the time that you need the money? And 3, where will the money come from to pay the taxes on the conversion?
We hope that this educational video gave you some insight on how Roth IRAs could be used to help minimize taxes on your overall retirement income. Please leave a comment in the section below and let us know your thoughts on Roth IRAs or Roth conversions. After this video, check out the other videos on ways to maximize your retirement income to learn more about how to make your retirement income last. To receive a free personalized found money report to see how Roth conversions could benefit you, click on the link below to schedule a complimentary no obligation strategy session with us today. Also, if you like this video, please give it a thumbs up, subscribe to our channel, and share with a friend. Thanks for watching, and remember, if you have questions,
we have answers.